What's up, everybody? It is Tuesday, March 16th. So I know the inflation trade, and again, I was talking about this more than a year ago. And certainly a year ago when we got the big stimulus. But it has really caught on now, at least in the commentary and a lot of the speculative activity that I am seeing. Most noteworthy, I would say, in the bond market. I've been talking about that, where small speculators, and I'm going to talk about one small speculator in particular, small specs are short 20 billion notional of treasuries. One small speculator happens to be the old former bond king himself, Bill Gross. Remember Bill Gross, who used to run the bond fund at PIMCO, and then he was kicked out of PIMCO. He had a fight with Mohammed El-Arian, and then he went to, I think it was Jeffries, and he did so lousy, and then he retired. So, according to an article I read, he is short treasuries, and he would classify now as a small speculator. I mean, he's a rich guy, but he's not going to be, his positions would not be reportable at the CFTC level. Okay, I think you need to be reportable at the CFTC level. You may have to have like 10,000 contracts or something like that. He's not going to have a position like that. And he's all bearish as hell on bonds. So that shows you like the kind of, and like he was, he made a lot of money, and I'm not taking anything away from him, but I remember like I wrote a thing about this guy, and I think I made even videos about him back in 2011, when at that time the Fed was ending one of its quantitative easing programs, and he tweeted, "Who's going to buy them now?" In other words, who's going to buy treasuries now? Okay? And I was like, this is the bond king? Seriously? I mean, the money to buy treasuries, the dollars to buy treasuries, comes from government spending itself. As a matter of fact, the government has to sell treasuries just to drain out the dollars in the banking system. We've been seeing this whole thing with the leverage ratio. If there's too much reserves, too much government spending, too much cash on banks' balance sheet, it screws everything up. I mean, who's going to buy them now? There are always buyers for treasuries by virtue of the fact that the government spends more than it takes away in taxes, and that adds to reserves in the banking system. And people swap out those reserves, that's cash that doesn't earn anything, to hold treasuries. Treasuries are basically dollars that pay you a little interest, and they have a term, like 2 years, 5 years, 7 years, 10 years. So when Gross said that, and that was back in 2011, and I wrote about this extensively at that time, and then thereafter many times bringing it back up. Like, this is the bond king? Who's going to buy them now? And by the way, the Fed does not buy directly from the Treasury. They cannot. It's illegal. The Fed buys in the secondary market bonds that were already purchased by individuals, institutions, by everybody else. Like, this is the bond king? Anyway, on the inflation story, let me just point something out, all right? I think it's a growth story. And I think part of the inflationary impulse that we have seen is pandemic related, or has been pandemic related, in the fact that we have seen supply disruptions. And some of those now are being alleviated as the economy opens up. Case in point, if you look at the oil markets, and the oil markets were in a backwardation, that means when spot prices are trading above deferred contracts. And that's usually an indication of tightness of supply. That backwardation is gone now. As a matter of fact, we are in the steepest contango. Contango is the opposite of a backwardation. Is actually the normal, really the normal curve or the normal slope of the futures markets, where futures prices are higher than spot prices because it accounts for, financing and storage and stuff like that. So the contango is now the steepest since January. In other words, the spot price has come down way below the futures price now. That is not an indication of inflation or tightness. So some of those things that I've been talking about with respect to the COVID situation, creating these disruptions, these supply disruptions and this market tightness, it's going away. Today you had a very strong 20-year auction of treasuries. Who's in there buying? I've been saying this. Look at the data every week. Banks are buyers. They're not sellers of treasuries. They are net buyers of treasuries, of agencies, of MBS. Bill Gross is a seller. Now, again, guy made a lot of money in a 40-year bull market when he was basically long, and basically when you're managing a bond fund, you're buying yield, you're buying coupon, and you just keep rolling it over. But then when he really had to make some money, and then he started saying silly things like, who's gonna buy them now? So yeah, anyway, that's all I'm saying. It's a growth scenario. And finally, I'm going to say this. If the Fed were in a rate hike mode, in other words, if they were hiking rates month after month after month, I'd be sitting here telling you, short the Treasury market, short the Treasury market. But they're not. They're saying they're going to hold rates steady. So ultimately, those bond yields are going to come back down again. They have to. Now, if the Fed turns around and says, okay, we're going to hike rates, tomorrow is the conclusion of their meeting, their 2-day meeting, started today. If they say, hey, we changed our minds, we're going to start hiking rates, then you got to be short the bond market. The monopolist sets the rate. It controls the product. It controls, it's all basic stuff, man. All right? I made a podcast today. It'll be out tomorrow. I'll let you know. Have a great rest of the day or whatever. I'll see you tomorrow. Bye-bye.